Thank you, everyone, for making it to this evening for the second edition of Agtech event in Delhi. I remember seeing most of the faces last year, and I think it was an amazing event last year. And we see much more, people who want to be a part of this event. So we're very happy and glad to see you here. And again, thank you for taking the time. Mark and Vani are known faces in the industry and have been pioneering in their own spaces in terms of trying to encourage entrepreneurship within the country and also doing their best to bring in capital required to kind of push this journey for all the entrepreneurs here. So I think since we last spoke, it was a different environment last year, and we are talking here in a different environment. I would always think that just like any entrepreneur who's eternally optimistic, I think as venture capitalists we are also eternally optimistic that things are going to happen. So we'll talk a little bit about that. But I think overall, we know why agriculture is such an important part of this country, contributing to a large GDP of this country, not just from monetary standpoint, but I think it's a very important part of people's lives and farmers who are actually trying to build cultivation and grow their own livelihood. The challenge, although we have seen, is more and more people are opting out of farming or also seeing challenges with actually truly building sustainable models which can actually help them live a good life. So that might be because primarily there is costs of high cultivation, or there is costs of labor which are actually challenging, and this is where we feel that there's a lot of technology intervention which needs to happen. And the good part is, if you look at the last few years, I think there's a lot of investments that have come in, but I feel that most of the investments have come into the upstream or downstream of agri-tech, which were solving for more of supply chain problems and actually not focusing on the actual farm economics or the technology that needs to go in there. So, which is very good in a sense, but I think people, one of the things what I felt was whoever was trying to build core technology solutions actually went off to building full stack solutions, either with opting for VC pressures or peer pressure with their own entrepreneurship community to build larger outcomes in a quick amount of time. So I think that was one of the challenges which we have seen, for people who are actually building core tech to move towards other spaces. So, I think given all those things, we feel that building the right kind of farm economics really comes into play when you're actually investing in core technologies which are going into the farm versus the input and the output side of it. So this necessitates integration of digital technology to support and empower farmers and the tools that can enable them, which can actually scale. So one of the things we're going to talk about a little bit here is that how can technology like IoT and big data analysis or AI, which is actually changing a lot of landscape around, can actually help do this. So let's just jump into asking a few questions here. From talking about farm management, sensing, IoT or data analytics, the challenge has always been is how do you look at putting these solutions which are kind of easy to use, which are affordable for the farmer, can help him with learning this, because means literacy is a big issue, and overall, how do you make it simple as a farmer using a tractor, right, which has been happening for ages now. So how do you do that? So I think solving for cost of technology, lack of financial resources, literacy status of the farmer, communication infrastructures, I think those are the ones which we want to talk about. So Vani, the question to you is, given that we are seeing all of this happening, how do you see technology, again, people have built technologies for the farms, but how do you see that changing with the evolving landscape of how data is becoming important, how AI is becoming important? And do you see that, we can build something which is cost effective, which is easy for a farmer to understand, which can actually scale, is where, I wanted to get your thoughts on.
Look, while I'm a technologist at heart, and when people say you're in the finance industry, somehow that doesn't seep in, because I don't think of myself as being in a financial sector, though I am, of course, because my mind is oriented to be an engineer, think products, think value, think customers, and of course there is a business outcome of it. And but it's not purely financial engineering. And but why I say this is, it's easy to talk about IoT or AI or whatever. How is that relevant to an average person, farmer or otherwise, is where I think we miss it sometimes. As a technologist, you love whatever your product or invention or something. And we obviously have many founders that come to talk to us, and oftentimes they can't explain to me simply, even after an hour, what is this value proposition to the end customer, right? And they can talk about products, features and all that, but they don't put it in that terms. So it has to be simplified and dumbed down at that level. There may be complex technology in the end to deliver it. You saw the lines for iPhone 15, just a mob really to buy iPhone 15. And does any buyer of that who's standing in line overnight to get the latest iPhone 15 know what is the technology? They don't, right? So it's the same whether it's agri or any other sector. Digressing here for a minute, how many of you have come to Terminal 2 Bangalore? Many, na? You can't escape when you're exiting to see those beautiful elephants, right? You have seen those? So I was talking to Tariq, who's the one who has created the business model around it last week. He was in Bangalore at a friend's place. I was talking to him. So if you think about it, we talk too much about technology, but what they have done is, of course, we know lantana, while it may be cute in your backyard garden, is a very invasive species, right? And it's taking over our forests, right? And and you can't really clear it because it produces at such a rapid pace and strangles the rest of the growth in the forest. Now, how do you clear it, right? Government can't pay for it. Nobody is going to clear it for free. So these two boys, Tariq and Sandeep, have done such a marvelous job. They did the experimentation to figure out how this lantana can be repurposed into beautiful, you can call it art outcome, right? And believe it or not, although their market hasn't been as much in India, I think last year they sold 500 of these to UK alone, and the cost of each of those elephants in UK that they have been able to sell out of a wasted lantana is around 20 lakhs each, the big ones, right? So there's a business model. Now they have set up a whole Adivasi factory where they are clearing out about a ton of lantana a day, okay? So, and repurposing it into something where there is value, right? So one of the things, and there is a technology behind it, by the way, there's a lot of work they've had to do to how does it change shape, but how does it retain the shape, and how does it last next 30 years? Because if you're going to spend that kind of money and put it in a museum or put it in your house or whatever it is, you're not going to do that. So there is a lot of technology to what they've had to do, and how does it travel, how do you ship it? And all of this is also technology. And I'm saying that not because I don't want to talk about AI or IoT or any of this, but ultimately there has to be a business model, and there has to be economics involved in it, and there has to be a value proposition. And for that value proposition, if there is technology that makes that value proposition affordable and accessible, then you will sell the technology, no problem, because you don't have to sell the technology. You have to sell the end product, right? So I will only offer, Vamshi, to me, we can gather all the data in the world, we can put all the intelligence in the world, we can put as many sensors as we want, but most of the time companies don't scale because they haven't cracked that equation of value proposition and the affordability of that value proposition, right? So, to me, I think also for India, largely we need to create shared models, because otherwise a lot of this technology for its adoption will simply not be affordable, even if the value proposition may be on paper interesting, right? So there is almost a combination of, there is nothing new in technology, really. I mean, we're not going to invent anything original for agri-tech. What we need to do is really take existing technology and be able to convert that into relevant value proposition, for which I think really the business models, how we do it, is far more important than invention of technology.
So, Mark, your thoughts on that?
I think there's sort of two things I would add to Vani's perspective. The first thing is market segmentation, right? Vani mentioned people standing out for the iPhone 15. Okay, yep, people stood online for the iPhone 15. What is the demographic of those people? Okay, higher income, right, or highly aspirational middle income. Whenever you're thinking about the farm economy, you're talking about, 10 crore farmers and their families. You cannot generalize that as the farmers this, the farmers that. You can't. They're not homogenous. They are absolutely not homogenous. They are all in very heterogeneous value chains that have different profit pools. And so where you see technology adoption is a function of the profit pool. It should come as no surprise that there is more technology adoption in, for example, horticulture, right? Or aquaculture, where there's even more, versus, unirrigated growing of pulses. Because on a per hectare basis, that's the difference between, right, being in the top decile versus, the lower half. And so I think a lot of people have perhaps unrealistic expectations of what technology can do across the board. But I think when you look at technology adoption in the areas where you should expect it, where there are profit pools, I think it is creating a lot of value. You're seeing that happen in dairy, in aquaculture, in horticulture, in the high value pools, right? And then also in the medium to larger farms when you start moving into the row crops. So there's market segmentation in ag. No one should be surprised. People should build their business models accordingly. That's probably the first thing I would say. The second thing I would say is that in general, we have a very unique opportunity here in India. If you and I go to California, okay, where I believe you used to live, okay, and we go to the Central Valley, there are like 100 farm sensor companies that are all struggling to get any traction with the farmers they're selling to, right? Even the best of them, right, might have $5, $6, $7, $8 million in revenue a year. We're talking about the Arrables and the CropXs and all of that, okay, the quote-unquote best companies in the space. Any farmer that buys that equipment has to buy, one base station, right, per, say, 2 to 3 hectares. Okay, cool. Those farms are like 300, 500, 1,000 hectare farms. It's a massive amount of CapEx. In contrast, if you and I go to banana growing districts in Maharashtra, typical farmers, 3 hectares, 4, they might need to buy 2 of those units. It becomes more like buying a consumer durable than a giant business CapEx. And so I think we have to recognize we're in a very different fact pattern here because of the smallholder economy that actually facilitates, right, some of these things that don't even work outside of India. And then the final kind of element of that is, you talked about things going full stack. I'm not sure everything needs to go full stack, but people need to be cognizant, right, of ecosystems when they sell. So we have a terrific portfolio company, Nico Robotics, okay? They're building farm robots. Everyone hears that and says, okay, what's the point of farm robots in India? How do they sell farm robots in India? The answer is they sell them to entrepreneurs. They sell them to people that are running, right? Agri input stalls whose kids are operating the quote unquote robot, which is an which is a self-propelled sprayer that's been turned into a robot, right? They're also exporting to the US. So the business models that we pursue here with what we call climate deep tech are going to be very, very different from what you pursue right in the West. And I think that actually creates a lot of opportunities that in fact agri-tech startups in the West don't have.
One thing to just add, Mark, I was thinking last year, I was in California and I was visiting a farm, or actually a winery, and what they had was a autonomous electric tractor, which did A to Z of what a winery needs. It is purpose-built because it has to be it may be adaptable to other things, but it's purpose-built for that specific function, right? Now, it's a beautiful thing to watch, especially if you love technology, to be able to see what they're doing, how it's all automated, from picking the right grapes, reducing the wastage, because if you pick at the wrong time, all of that, right? And it has its route, it understands camera, sensor. You can easily, anybody, even if you're not a technologist, you can think about what are the components that go into the architecture of something like that. That's not really that difficult, not so much about how you build it, but just to know what are the things you need. You need cameras, you need sensors, you need some library for it to know what is a ripe grape, not a ripe, so on and so forth, right? And the path and all of that, right height, all of that. And, why is it? Because there is, of course, food wastage. Can you reduce that? Shortage of labor, how do you add to it? So all these things are there. But what is the operating model of something like that in India? I was thinking to what you just said, right? But the operating model for India cannot be a capex model at the end consumer level or end farmer level or whoever the end stakeholder is, because that's not our structure. Whereas that model may work in the West, but that model cannot work in India. It's not so much it's hard to build that tractor. I'm not saying it's easy either, but it's not rocket science, as they say. You could build it, but how do you bring it to the end customer and make it viable at a certain price point, right? And it's the same thing, whether it's drones, whether it is robots, whether it's EV farm equipment or whatever it is, right? Even if it is cold storage, I know, Tej, you just invested in a cold storage company. And whatever that is, I think it's still about ultimately the engineering of end solution is where I think not enough innovation is happening.
Right. I think from farm mechanization tools, one of the things I keep, and we've seen a lot of companies which are trying to build very localized farm mechanization tools as such, which can actually be enabled with a lot more technology, which is not happening. Because I think, like you rightly said, how is the business model going to work? Because I think one of the interesting models which we've always seen for ages is a tractor, the way it works, right? Because every farm, like you said, 2 acres or 3 acres, is spending anywhere between 10 to 12,000 using the tractor on an annual basis, basically for doing tilling.
Tractors now you can lease. I think most farmers don't really, small-time farmers don't.
I'm saying from a leasing perspective, because someone is owning it, then leasing it. There's a model which has been established, right? So you know that there is a model out there. Now with these tools also, when we talk about autonomous tools which can monitor the farm, which can actually do weeding, which can do harvesting and all that stuff, with what I was trying to understand is with all the technology that is coming in from different segments of whether autonomous vehicles or drones and all that, are these going to get very cheap and easy where it can get to a point where the farmer or the village entrepreneur can actually do it at a similar level and fashion the way the tractor is happening, right? Like what Mike you're saying, what are the things which you think will be able to enable those subtle elements which can actually trigger that?
Time it will happen, but I think the question is not just that. I think utilization, all of that, and that will happen. I think there is also a lot that can and should happen. Just to talk about the lantana example, with the farm outputs, right? So we're not necessarily done all the material engineering that can continue to create value, right? And I think there's a lot that's happening in that also, which can be very interesting, right? Whether it's extraction for alternative protein sources or whatever it is, there is probably gold in the waste, so to speak, right? Which is really where some of the innovations need to happen. But a lot of innovation is yet another input-output optimization through a website or something like that, right? There's only so much seed you can push and so much discount you can do. So I would encourage and would be excited to see founders really work at the core innovation level of things,
Yeah, I think that brings to the next question, which we were talking about in terms of, how there's a shift you're seeing in terms of manufacturing coming in, life sciences coming in, biotechnology kind of moving into that space. So Mark, you had some great thoughts on that. Would love to hear that.
Look, I think there is a new seriousness in the world that we've sort of seen, I would say, in the last couple of years, right? The dream of interconnectedness and a frictionless globalized world has crumbled. It is dead. The corpse is rotting, right? We now all understand the pandemic, right? And the subsequent inflation, right? And the subsequent war, right? Has taught us that actually things like self-sufficiency in vaccine manufacturing, self-sufficiency in food security, right? Self-sufficiency in manufacturing capabilities. These are all very, very real things right now. This is very different from the world that all the Gen Xers and millennials in this room were told to expect. We were told to expect that every nation in the world would want to trade with each other, that every nation could specialize in what they were good at, right? India didn't need to do manufacturing because we had wonderful coders who could export and generate, export revenue, and it was okay. Nobody believes that anymore. Nobody believes really in free trade anymore, right? Everyone's going to do for their nation what they think is best to put them on a path of security before anything else. And so I think in this environment of sort of a new seriousness, right, which is extending to everything. It's extending to space. It's extending to defense, right? It's very interesting to go to Europe now and see an entire generation of people that thought that war was never going to happen again, having one in their backyard. Right? So I think there is a new mindset, and that mindset is affecting founders, and a big part of that is climate. Right? There's a recognition that unless certain things are done, this whole world is going to be like Delhi in May. And nobody really wants that. Delhi is charming because of the other seasons, not May. And we are seeing that in the kinds of founders that are approaching us for funding, the kinds of businesses that are being built, and in things that we didn't expect. We're seeing more and more manufacturing-related startups. India is going through a manufacturing renaissance. It's been a long time coming, right? It was supposed to happen in the 50s, and then it was supposed to happen in 1991, and then it was supposed to happen in 2004. And here we are in 2023, and it's kind of happening. Not perfectly, and not in a perfectly linear fashion. But what was initially a slogan of Make in India is becoming a new reality. And so we're seeing founders coming to us, right? We've got the founders from Alt-M in the room. Can you guys stand up? Apur Vugal. Hi, guys. Right? So we're seeing 2 Tesla alumni moving back to India, turning their back on the H-1B and the American dream, and coming here and building a business around converting agricultural waste into sustainable materials. We have Loopworm, right, where I walked the floor in Bangalore, 2 weeks ago, taking insect protein and building a biorefinery out of it. There's a new seriousness around manufacturing, around life sciences, a willingness to take technology risk, and a willingness to try to build a better future that's more than just, as you kind of put it, a website, right? More than just digitization. And we're big believers in that. We started an initiative a few years ago called Omnix Bio, with the vision of saying, look, there needs to be more catalyzing of the semi-moribund life sciences ecosystem in India. Let's work on that. We're doing deals in that space. We're very interested in climate deep tech. We're very interested in sustainable materials. And so that's becoming a big part of who we are and where we're focused and what we think are the most interesting opportunities in this moment.
That drives to an interesting question about, are these different kind of entrepreneurs? What is the competence level? Because we, like you said, traditionally we've been coders. We only know software, and that has been the core driver of this whole ecosystem.
Think about
about manufacturing, life sciences.
These are hardcore engineers.
I don't understand it. Right. I'm a coder. So for me, are you seeing a new set of entrepreneurs? Are people picking up these areas to kind of focus on?
I think what you're actually seeing, and this is to gently tug the leg of people in this room, is people who actually graduated engineering school and did actual engineering. Okay, did industrial engineering, did environmental engineering, did biotechnology engineering, did chemical engineering, and did that for their work, as opposed to, right, in their fourth year of school learning how to code. Right, which is unfortunately, I used to joke about this when many years ago I used to recruit at the IIMs, right? And I would meet all of these people who were engineers, and I would sort of quiz the room, who studied this kind of engineering, who studied this. I'd be like, how many people here are civil engineers? And there'd be like 20% of the room, and it's like, yeah, good thing you're learning how to sell soap. Yeah, we don't need roads in this country. Good thing you're learning how to sell soap. I think it's great. But I think it also speaks to the fact that one of the things that India is going to have to grapple with, which China grappled with about 20 years ago, was bringing back the technology diaspora outside of coding and management. The coding and management diaspora, the FMCG types, the bankers, that's been a two-way talent highway for about 2 decades now. Vani's a case study in that. Okay, you went, you came back. You
haven't tested my engineering skills. Let's have a sort of discussion.
No. But the equivalent of Vani, if Vani was a biotechnologist, you would still be living in California, okay, or Boston. There's a huge amount of diaspora talent related to these core technologies that's largely outside. Largely outside. In Europe, in Singapore to some extent, deeply in the US. And if we're going to really scale up in this space, we've got to get a lot of those people back home. The good thing is the US government's doing that favor for us. Okay? So, but there's a lot of work to be done.
But to be fair though, one of the common complaints you hear from founders is everything is a linked chain, you see. So where are the investors? We have to get the founders, but there is a capital requirement. And if you think about just even coders, were they coders, body shopping, maybe earning a better living than their parents did, buying a house not at age of retirement like my dad did, but buying it within 5 years of starting a job or whatever it is. So that's what we were doing until we were able to create a venture capital ecosystem, which has been the last 2 decades in the making. And so probably beyond most of your sort of conscious imagination of what that was like just only 2 decades before, that access to capital was just not there for a whole generation of people, including me, in India, right? So specifically. So we also have to think about investment, because when we talk about hard sciences, right, or even manufacturing, to set up a fab, it's going to cost you $2-3 billion. So there has to be, it is neither private investment nor public investment, because it can't be done in either of those siloed models, because it has to be done in a very, very strong PPP model. But those are things that are very important to think about, because I think fairly so, like founders point out, the funding models for really core technology companies, if you're doing material science, let's say, in something, or, conversion of sustainable technologies, there's a lead time to technology. Okay, and we are too much in love with headlines of ET or whatever, my valuation, my this, my that, and so on and so forth. But you are going to have to put in 3-5 years of hard effort to be able to get to a viable product. And I think the investment sources in India still are very nascent for that,
Yeah, but I think it's changing.
No, I agree it's changing.
But I'll make 2 points on that. The first is, unlike in technology-enabled businesses, where 2 IIT IIM founders leave, I don't know, Flipkart, Uran, pick the flavor of the month, okay, and start a business, right, and raise a $1.5, $2 million seed on a PowerPoint, okay, a lot of these deeper technology businesses are going to be around for 2-3 years working on grants, okay, not immediately raising money at the moment of inception when people are still at other jobs, okay? So the things that will come for seed funding are probably going to be, right, 3-5 years old by that time. That was certainly the case in our portfolio with Bioprime. They'd been around for a bit. Before they raised money from us, similarly with Loopworm. The other point is Indian founders in these deep sciences are built differently, right? And the way they operate is different. We broke ground on the Loopworm factory, I don't know, like 8 months ago, 9 months ago. They're shipping product. Is it the absolute future of that? Is it what the product's going to look like in 2 years when it's peptides and isolates and concentrates? No, they're shipping a basic, right, insect protein. They're shipping a basic insect fat, right? They've stabilized it. It's a good product. They can monetize it. They're going to fill the capacity of their factory. It's very exciting, right? And then the magic will happen. Then you've got a stream of monetization, and you build on that. And I think that you'll see that approach, right? The same tendency towards monetization, right, across a lot of these founders. Get something you can sell, then make it fancier.
In 2006, when I came back to set up venture capital in India, if I looked, I couldn't have founded deep tech companies, and there just wasn't any, right? So I had the same frustration of, we have a lot of coders, but how are we going to really build scalable IP, right? Today, I think the situation is far different. Just in the last maybe 18 months, if I think about the kind of technologies, now whether they will work, whether they'll take over the world, we will know a decade later. But someone who's trying to reimagine what a motor is going to look like, something that hasn't been reinvented in the last 100 years, if you will. Is there a newer technology? Motor goes into everything, from your fan to your fountain to everything else. So what is a new technology for that? What is new battery technology? What is space technology? These are 3 kind of companies that we have funded just in the last year or so. And I shared that only to say that founders being bold about this, right, is just a beginning. So if I look back to the last 2 decades, when I just started getting involved into Indian venture, and how, unless you were truly an optimist, by and large, nobody gave credit to how far we have today come, right? And even I'm surprised in the last decade how much the startup fervor ecosystem and scale depth has actually happened. So I think the technology movement at all sectors, whether it's agri or anywhere else, because see, there is a baseline technology. IoTs have existed for 30 years, 40 years. So it's not that there's a certain cost that it has come down to, certain platform technology that has been built, and then, over time, it becomes pervasive into everything, into a car, to a tractor, to a, into a tree. Today, you're putting IoTs into chips into trees to, track it for forestry, for carbon credits, and for all kinds of stuff, right? So, but there is platform technology, and there is how the technology gets adapted, right? And a lot of those core technology companies are getting created today. We have probably invested in half a dozen of those, and more firms are doing that. So a decade out, what is it that is the transformative technology solutions, and how have they really been affected? While I agree that there is some, maybe damper to free trade, trade has always existed. Go back to the Silk Route, right? Somebody has something, somebody lacks something. So trade is never going to be insular. Then you have, like what happened to the Chinese civilization or whatever. The more you are closed off, you are not allowing innovation to travel across, right? So I think that as much as I think there is an India to global story, which also I'm very, very excited about. And that's not just SaaS, please. Every other company wants to go and sell to US enterprise and wants to be a Delaware corporation. And so I'm less excited about, SaaS to global, but India to global. I think there is a tremendous opportunity. The reason is because we are somehow wired to think from cost effectiveness, right? I mean, you have all seen the Chandrayaan at a 75 million versus, Christopher Nolan's movie at 175 million or whatever it is. So how is that possible? I think there is a core cost economic equation that the 8 billion people of this world, which is largely not all just the Western civilization, right? Which, require the kind of solutions we can create out of India. So I think there is a very large India to global in technology, which I'm hopeful, the reason to be optimistic today as a venture capitalist, especially if you're one who loves technology, is because we'll see a lot of India to global technology companies emerge over the next decade, I feel.
Absolutely.
Thank you. So one last question. I think we're running short of time. It's always interesting how much conversations we can have.
Interesting to the three of us. I don't know if anybody else is interested.
The biggest question everyone has mostly is, this funding winter, when are things going to get better? What are you seeing basically? Because I think that is where most of the people, when we talk to, or, everyone I spoke to here, and, they're all trying to get a perspective on, what's happening. Are you seeing shoots of,
Can I just say something here?
You have a much better perspective.
No, I don't. I was going to say, when I first moved to Minnesota, I'd never seen snow before. Obviously grew up in Hyderabad. The whole funny story to my inculcation, which I won't go into. But after 3 years, of living there, I didn't even realize it because, your body adapts. I didn't, I could leave the thermostat at 69 and feel that it was fine. Okay, so Fahrenheit, obviously. So you adapt, you see. So I know people talk about funding winter. I hate that word. What winter, right? So there are people who walk in shorts in Boston, January or whatever. So that's what you need. My point is, for good companies, there is capital. Yes, there are movements in capital sometimes where maybe bad companies, or at least companies without really, really viable model get funding also. But I think that there is plenty of funding. If I'm contrarian, so be it. But I really think there is plenty of funding. Funds have raised money. We have money, right, still to invest. And I don't think that if you have a really viable company, whether it's Series A, Series B, Series X, the problem is you might have raised valuation in 2020 or 21, which is no longer viable. But if you are running a public company, that is still the case, right? Are founders adaptable is the question. It's not about winter. Winter is a season. Funding is a season, right? You have to adapt. You can't always have summer. That doesn't work either, right? So I don't think it's a question of winter. It's a question about, oh, when is the winter going away and when will the summer come? No, you have to adapt and you will survive. And there may be summer again, right? How long, we don't know, but you have to really adapt. And the founders who will survive, right, and make their business models work, not get trapped into this, valuation hypnosis, I think will do fine. And, I see a lot of capital in the world.
So I both agree and disagree. I do think that there was, for about, I would say, a 12-month period, maybe you could say it was 14 or 16 months, a freeze up in capital, even for stuff that was good. I fundamentally agree with Vani, by the way. If you have a good company, people will invest in it. And if they're not investing in you, it's your valuation is too high, you're asking for too much money, or your company's not as good as you think it is. But just to take a step back, there was a meaningful freeze that did happen in retrospect. The analogy that I keep giving to people is, imagine you're on a highway. You're driving your car, okay? Your car, it's late at night. And all of a sudden, the lamps in your car kick off. You have no lights coming out of your car. And there are no lights on the road. What do? You slow down. You go 30 kilometers an hour, okay? You crawl until you have some idea where you're going, right? Some sense that you're not going to crash into a wall. And so I think what happened in kind of the middle or early 2022 is the lights went off. The lights went off in the car, the lights went off on the road. And all of a sudden, nobody had any idea what the price of anything was anymore. And I'm saying this is for venture funds. Nobody had any idea what a Series B was going to be priced at, a Series C. Nobody had any idea what IPOs would be priced at, and it bounced back through the rounds. And so for about 12 months, there were lots of people that had capital and basically said, cool, I'm going to wait and see until either the lights on my car turn on or the lights on the road turn on. And so, yes, there was a meaningful freeze.
Or I give you enough fuel to just crawl.
Yeah, also true. But I'm saying the fund is the car, okay? And so, bottom line, I think now there is some light. And so you're starting to see now, and yes, I would have said 6 months ago we were in winter. I think it's beginning to warm up. We're seeing across our portfolio a number of Series A's getting done and stuff that we seed funded, some Series B's getting done, right? Are they at the dream prices of those entrepreneurs? Are they at the 2021 prices? Hell no, okay? But they're moving. And by the way, they weren't moving before. So if you're an entrepreneur and you're sitting in this room and you're like, yeah, no one's investing, you were right. You're not at this moment still right. Things are thawing very quickly, but they're thawing at a new normal, right? That is going to be very different from the old normal. And you just have to adapt and wear your shorts in winter.
Yeah, I guess that brings us to the closure on this. And just in the interest of time, I would have loved to take maybe one or two questions. Maybe if anyone has a question, we'll just take one. Maybe
Sorry?
1 second.
Going to look like? Is it going to still be profitability driven as it is currently very severely getting pursued, or growth will also get some premium?
Let's both answer that. So I think two things. I don't think a lot has changed at seed, honestly. I don't think a lot has changed at seed. I think at seed, the vanity metrics of like GMV are way less interesting as opposed to what are your unit economics going to be and how much capital are you going to need, right, to break even. But I don't think seed slowed because people didn't want to take bets when they didn't have visibility into the ability of those companies to raise an A. But I don't think fundamentally seed has changed. Right? I do think that the new normal for Series A is very different from what it was in 2020. Right? The rounds are going to be smaller. It's going to be 6 mil, 8 mil. You're not going to see so many 15s, right? Or 12s even. And the expectation of what you do after Series A is not going to be raise a shit ton more money 18 months later.
One more.
Thank you. Mine is a little different. I'm Karan, I'm from CEW. Given that you have this overview of the entire agri-tech sector, my question is, what is the enabling ecosystem or the kind of partnerships that need to be enabled not only for agri-tech to scale, but for the sustainable goals in general for the farmer, for the farm, that so that they can be achieved. So whether it's the policy ecosystem, the CSOs that are in place. So you said very interesting point that the entrepreneur is not just the farmer but the input dealer as well. At a similar level, there are CSOs which create certain value, policies which create certain lock-ins or sometimes unlock some things. So what is your perspective on that thing, on what needs to be enabled?
There's very little that I, as a lowly venture capitalist, can do about policy. There are some other VCs that have political clout. I'm not one of them. But I do think that this government is very cognizant of agritech, of the agricultural ecosystem, of the importance of startups, of the importance of technology policy. They released a fantastic deep tech policy quite recently. The space tech policy has been amazing, right? Overall support of the startup ecosystem has been great. And, even things like drones, which previously were choked in regulatory barriers, have been unleashed. So I think in general, the good thing is that we are blessed with civil servants and a political class that is aware of the importance of innovation. And I do think that there's quite a bit of collaboration between the startup ecosystem and the policymakers and the civil servants for this sort of thing. But obviously, there can always be more. And please say hi to Arunaba for me.
Thank you. Thank you for the questions. And thank you, Vani and Mark, for sharing your thoughts. And of course, we are available to take some more, one-on-one chats. And
One or two more, please.
Because we have another session. Okay, Mark says we can take one or two questions. Any questions for?
Yeah. Hi, this is Sanyal from Indian Energy Network. So my question is on the exit part, because obviously there's been a shift in the type of company we have been doing, like more shift towards deep tech. But the challenges for the VCs is that even the IPOs and the M&As are not happening in some of the sectors like e-commerce, in fintech. Those are the highly funded for over decades. How do you see agritech is now moving on? If we invest now, how do you see the exit is coming? Given the current scenarios on IPOs and M&As also is not happening because large corporates don't really invest into or buy in a large valuation companies. So that would be my question for you. Thanks.
I mean, at least for us, we invest with a decade in mind. For me, this sort of maybe funding winter, to borrow your word, probably a fifth cycle that I'm seeing in my life, right? In fact, a lot of things are cyclical because there is a course correction that happens. Things sort of get to a certain bull markets and, there's a correction. It doesn't ever mean that that's the permanent state, okay? Economic cycles are not predictable, but inevitable. You may not be able to predict exactly when, but they're inevitable. So, this notion, the IPOs or whatever, to me, again, I don't think that stops at least me as an investor to be active today because, I look at it from what is getting built for the next 5-7 years where there can be exponential value that gets created. I don't think we are building for the season or building for the flavor of the month. At least we don't, right? I would encourage founders to not worry so much about all of this noise outside, but find a problem that you have a very unique insight and that you are truly passionate to solve and feel that that's your life's mission. And obviously, you have to keep in perspective who wants to buy it and can you really build a viable business. Just stick to that. It may take you a year, it may take you 3 years to figure that out. But if you can do that, I think a lot of this noise goes away and a lot of problems get solved. I have been a 2-time founder, having built 2 companies, having gone through excitement and bust of internet in bubble in 2000 and so on and so forth. There are so many cycles I've gone through. But you have to work through the cycles because there will be other capital market cycles that will come up. So don't worry about that so much is all I can tell you. There's someone who's been... Yeah, go ahead.
Hi.
No, I think he was there standing, if you don't mind. And we should take a question from her because we rarely get any women asking questions. But let him go ahead and then we'll take her question.
So, sir, you mentioned earlier that there are some limitations to what tech can do in ensuring sustainable agricultural outcomes, better yields. And also, like with the burgeoning population and decreasing share farm holding, does agriculture, is Indian agriculture or global agriculture going to creep into the wildlife space? And if that is the case, how do we address that issue? Is it going to be a policy proposition from the government side, or are enterprises going to take up that challenge to solve this issue, like biotech companies such as Omnivore?
I'm not sure I fully understood the question.
It's not really able to understand the exact question. So
Maybe we can talk post-event.
Yeah.
You can talk to him in more depth about it.
All right, thank you.
there's one more question, I think, from some lady over there. Yeah.
Hello. Yeah, hi Vani, hi Mark, I'm Parul. So my question is around what kind of, funding benchmarks you will set for the companies who are into deep tech. We cannot look for growth or profitability for the companies which are building new technologies, right? But they are there to convert the world, to create a new category. So how would we go about that?
I think it's a question of IP. IP itself has a lot of value, but is it truly a differentiated IP? Is there really a moat over time for that IP? I think there have been enough IP companies that have been sold for very high value. And if you just look in biosciences, like Mark was talking, where this model is much more become standard. There is, a drug discovery, and that's different from being able to work through, that's phase 1, and then phase 2 of being able to just work through the regulatory, and then phase 3 of consumerization of that. So now it's possible, and over time, all of those have different value models through which investment and output are generated out of it. Deep tech is not that different. It's just that you can't call something deep tech when there isn't any true IP that's getting built. I think the people who create the IP, and there's more on, today we live in a world of IP protection. So the building of the IP and commercialization of the IP may be two separate things. In fact, I belong to the school of thought that not necessarily the two, except in exceptions, should be the same. And oftentimes founders who build the IP get sidetracked because they also think they should commercialize the IP. And that's a very different skill. Like Pfizer consumerizing a drug is different from a scientist trying to create new formulations. So they're not both necessarily the same skill set. Okay? And I think deep tech belongs into that category also. And that's not to say that there can't be significant value generated to the founders or the investors. But the question is, you have to be really clear, what is the foundational IP you're building?
Okay.
And I would just add that I think there are good interim deliverables between just starting out and an exit for a deep tech company. So shipping product, right, from a pilot plant, right? Let's say you're doing something in the biological sciences. The fact that you're now making a substantial amount of your product at some amount of scale, pilot scale, right? That might be the deliverable that you need to raise your Series A,
Definitely.
right? And your Series B might be about partnerships, right? That you're not planning to commercialize this all yourself, but you have 3, 4, 5 partnerships with large multinationals, Indian corporates, right? I would think of it that way. It's not necessarily going to be your income statement that drives the way
milestone based,
right? It's much more milestone based.
Understood. Thank you so much.
Great. Sorry, guys, we don't have much more time, but we are here to chat up after this. So thanks, Vani. Thanks, Mark, for making it, and appreciate your time. Thank you.
Sorry, wandering off.
Okay. Yes. Yes, sir. 1 minute. Yes. Thank you. Thank you.
All right.
Thank you so much. Guys, so please welcome on stage Devendra Gupta, co-founder of Ecozen, Animesh Agarwal, co-founder of Tractor Junction, and Mukul Garg, co-founder of AGRIM. The panel will be moderated by Subhadeep Sanyal, partner at Omnivore. Thank you.
Hello. Perfect. Thank you, everyone, again for coming over today. And after that nice discussion with Vani and Mark and Vamshi, we'll move to kind of a very boring topic, but I guess a fundamental one. That's about how do you build profitable businesses. We won't really talk about funding and all of that. Maybe they've spoken enough about it, but as business operators, as entrepreneurs in the space, how do you kind of navigate through the journey of building scalable and sustainable businesses, and some of the nuances which specific to being an agri player, being startups in agri, what does that mean? So I have 3 wonderful founders who are building very diverse different businesses today. Probably will just request you guys to quickly introduce yourself and what you do for everyone in the audience. And also post that, maybe just tell everyone what does sustainability and scale mean to each one of you for your businesses as a starting point. So you can start with maybe from the far left, Animesh.
Right. Hi, Subhadeep. Thank you for having me. Pleasure. My name is Animesh. I am the founder of Tractor Junction. We are a company operating a platform for new and used tractors, and also have a full stack business for used tractors. Scalability and sustainability for us at Tractor Junction means to always keep an eye out on the costs, so that the dependency on external capital does not go to a point where we need it to fulfill our goals and our plans. So, yeah, in a nutshell.
Cool. Thank you, Mukul.
Hi, good evening, everyone. Thank you for having us here. I'm Mukul Garg, founder of AGRIM. We are building an on-demand agri inputs B2B value chain, right? For us, right, I guess we were COVID-born company, right? We founded in 2020, right? The day before the COVID hit us, right? I guess from that time onwards, right? From the day one, right? The way we thought about building everything in the company, right? It was even before the product market fit, right? The terms which we use quite often, right? For us, it was the business market fit, right? When you solve a problem for the ecosystem, right? Are they happy and are you making money, right? And with that, right, if you scale, does that non-linearity improves your profitability or not, right? I guess that is how we look at the problem overall. Thank you.
Devendra.
Hi everyone, I am Devendra. I run a company called Ecozen. We are based out of Pune. We essentially help farmers to power their farm implements. So we provide solar pumps. We also are providing solar-based cold rooms. Now we are launching solutions wherein you can have universal farm sources. So essentially working on energy efficiency, IoT, and clean energy for powering agriculture. When you talk about what does sustainability and scale mean, I think a lot of thoughts really, but I think one of them is really that for me, sustainability drives scalability. What we have seen is that when you focus on sustainability, like let's say just talking about becoming more cost efficient makes organization more sustainable. Doing that forces you to get so much clarity onto your business that that clarity drives pointed scale forward. So for me, sustainability is something which can be a tool to drive scalability, not just that if you're focusing on profit, you're not going to really grow. So it's probably the other way around. And also in a more macro context, what I feel is that so far, we have tried to scale globally without focusing on sustainability as humanity. And we have reached a point wherein if we continue doing that, we would not be able to scale. So to me, sustainability drives scalability.
Okay, superb. So let me then kind of start with you. And in terms of operating history, I think Ecozen also has probably been there longer than both AGRIM and Tractor Junction as of now. And you've seen, as somebody who's been on the ring fence, and we've seen multiple ups and downs in businesses. So question to you, Devendra, would be that when you think about this, what do you compromise to build sustainably, right? What are some of the trade-offs that entrepreneurs have to go through? Because it's wonderful for us to sit and say that, let's be profitable, but everything comes at a cost, right? So what are some of the trade-offs? And if you can give examples of, that as well, it'll be pretty interesting to hear that.
Sure. So I think one of the phenomenal conversation we have had, and it stretched out for almost 2 days in our core team, was core versus core. So core is like something which we are very passionate about, which is our vision, the product we are building, the business model we are committed to. And we want to just do that. And suddenly, and we are trying to do that, we are trying to make that happen. There are challenges. We are making some money, but it's not good enough either to sustain us, or it's not at a scale enough to sustain us. So an opportunity presents to itself, and it asks us to be flexible. That if you are willing to tweak your business model a little, then maybe you can actually make money. But should we be opportunistic, or should we be not, or should we just be focused? So that's a big dilemma. So focusing on core is focusing on your vision, on your product, on your business model. And score is like, can we be flexible quickly and also create bottom line while doing what we are doing as core? So what we learned was that you have to really understand what you are committed to. Are you committed to your technology, or are you committed to your customer, or you are committed to your business model? Whatever you are committed to, try to stay committed to that, but then become flexible on the other things. The problem starts happening when you commit to a lot of things. And of course, people might have heard that it's difficult to honor all the commitments. So what we learned is we are committed really to the technology. The moment we understood that the technologies that we have built, we are committed to that, we started seeing market in a very different way. Okay, we started seeing that, okay, here we are looking to only sell the PCB of the controller that we make. So a competitor came to us, asked us, I can give you an order of 10,000 circuit boards. It's something, that person is our competitor, and he's coming and asking us for the PCBs. And which we also make and sell as a product and compete with that competitor in the market. And we said, should we do it? Should we not do it? And then later we decided that it's helping us make money. Okay, so we should go ahead and do that. So I think that are the kind of compromises. You have to see when these opportunities come, you really be flexible. You don't compromise on your core. Have some commitment, but don't overcommit. Be flexible. And as you are trying to explore the opportunity, say another opportunity came wherein we had to do more than what we do. So we sell product. So somebody was asking, can you come and install the product for us as well? So we said, we don't do this. In past, we would say we will not do it. This will defocus us, this will create operational hassles, we don't want to get into it. But then when we thought, can we be flexible, can we be creative? We figured out another partner. We figured out a partner in Mahindra. Mahindra, who has the largest execution capability, they were ready to take our installation work. We got the contract, and they were the subcontractor for us, and they were executing. And definitely, if a margin in the product was X, by taking the whole thing, we were making 3 or 4X for sure. So I think these are probably the compromises. I would say it's like, it's pretty, it drives a lot of emotions that you have to do what you are not very passionate about. But I think if you are creative, look at partnerships and alliances, you are able to still make money in the process.
Okay, useful, Devendra, and thank you for some of the practical examples also there. Mukul, one kind of related question to you is, given that you guys are both a very deep operational as well as a product led company, how do you kind of ensure that you're, like squeezing every, rupee possible, every paisa possible from the product, right? How do you, when you're building out a company where, as you correctly said, that business market fit has to come first, and then maybe technology also plays a role. How do you ensure a product is built in a way, and you come from a product background, which is why the question to you, that how do you ensure that it is able to bring out and extract all the value that it's supposed to do from the market? And again, if you could use some learnings from your own operating history, would be good to share.
So very interesting, right? So when we talk about product, right, we typically think that product is all about what consumer is using, either on the either side of the marketplace or a platform, right? But essentially what I have seen for companies like us specifically, right? So there is a company which you are running, right? Most often than not, we get confused with the fact that there is a product which my consumer is using and which my seller is using, for that matter, right? I had, during my black bag days, right, I had seen when you scale exponentially, right, where you are growing like 20% month over month, right? If your internal processes and SOPs are not tight, right, it becomes really difficult to control that behavior as you scale, right? So when I say control, what I mean is the leakages which gets built with the scale in a business, right? The inefficiencies, people inefficiencies or process inefficiencies which get scaled drastically, right? So you have to spend enough time building your internal products before you scale, right? That means building around finance, right? We as engineers or people, those who come from business schools, right, typically don't spend enough time doing accounting, right? हम सोचते हैं कि वो हो जाएगा, right? Somebody will do that, right? But when you are running a business, right, running finance tightly through product is a very difficult job, right? Setting up the right ERP processes, right? Building SOPs around that. So I have seen building product, internal product layer is one. Second is building the SOPs and making sure people are adhering to it. So having all those processes in place, even before you start scaling, you hit the business market fit, you build that internal product, and then you scale. So that at scale, right, you are able to squeeze in those efficiencies, every paisa everywhere, right? So just taking one example specifically, right? We, this might get a little boring, but bear with me. We had this pricing engine, right, in our company, right? Typically, pricing is so dynamic in our industry, right? We had to build a data sciences driven pricing engine, right? And take the entire control of the pricing from the category management teams, right? Category management teams like had a nightmare. I had a nightmare because they were having a nightmare, right? So we took 1 month before the entire leadership team and the execution team around that got onboarded with that idea. But that took a lot of effort for us to get there. So those are the things which you have to do even before you are at scale, right? Otherwise, when those leakages starts happening, it becomes really difficult. You try to push those things under the carpet, but that does not go well in the long run. So I guess that is how I look at it.
Understood. Thanks, Mukul, and I think fully appreciated as well. Animesh, from your perspective, and this is something which we've heard a lot as well. So we were chatting before this panel, and you brought up Amdani Athani Kharcha Rupaya as a moniker. So tell us, how does one build that DNA in a company? That how do you invest in measurable kind of growth? How do you keep or how do you build the organization DNA to kind of have that alignment towards profitability? I know that's how you guys have built Tractor Junction very carefully as well. So again, some insights there as well, because when you bring on new talent, which may come from a different operating mind space, how do you kind of integrate that thought process without really rocking the boat, right? You know what I mean? So some thoughts there would be good to share.
Yeah, sure. So we were bootstrapped for a good 4 years of our journey, right? So profitability was not a luxury for us, right? You had to pay the bills at the end of the month, you have to be profitable. There is no second option for you. Once we got backing, we tried to not let that DNA get diluted or not to let that basic essence of business go. And now when we are building in a VC-backed organization, a startup, we have tried making efforts at every grade of employees, right, from junior to senior, that they keep an eye on their P&L, on their manpower productivity, on their utilization. One of the ways we've been able to do it is inculcating every rupee counts as our core value. We make it a part of their appraisals. We make it a part of employee appraisals of their performance management. Everything is centered around one of the 5 core values, of one of which is every rupee counts, which is relevant here. Because of doing that, we have had, and sustainability for us is not about reducing costs, right? It's not about being frugal. It's not about being chindi. It's about thinking of ways where you can add either a single rupee to your bottom line, to your top line, or reducing any of the costs that you can do. Because of this activity, we have had instances where HR team has generated revenue for us. Right? The amount is insignificant, right? HR team has generated revenue. Content writers who write content for the platform, they have had monetization ideas. We have had cost-saving ideas coming from our logistical drivers. So that, I think, has been an important step when we try to create a DNA around sustainability within the organization.
Awesome, thank you. And kind of coming to the segue with investors. How do you again, let me start with you. You mentioned bootstrap for the longest time ever. How does it, how do you convince investors who are used to seeing burn, who are used to seeing capital being deployed in a certain fashion? How do you make that shift? And this applies to, I think I'll come to all three of you, because you've of course raised capital at different stages of your journey. But how do you make that shift that, listen, this is not a business in which if you suddenly pour 10x the money, we can grow 10x, for example, overnight, right? So how does that shift happen?
So I think it is about open and honest communication with the investors, right? If the investors on your cap table understand the ground realities, right? And it is your job as a founder to make them understand the ground realities, that burning capital is not the solution, right? So I think a good thing that has happened post the overheated summers rather than a funding winter right now is that investors have also started to shun away the growth at any cost mindset, right? So they are halfway there. If you are able to make them understand that burning capital is not the solution, right? And you are still able to say keep pace with your growth, I think they are ready to understand and value that as a trade in the organization. Also, I think it has got to do a lot with proper planning and expectation setting right upfront for the entire financial year. So when you make an AOP and share it with the investors, discuss it, close on the plans, I think setting the right benchmarks that you are not going to grow 20x, 10x in the entire financial year is very, very important. And getting their buy-in at that stage is very, very important, that the growth that we are talking about is 3x with a very strong focus on the bottom line. So I think that's the way we went about it.
Mukul, how about you?
See, the profitability, right? I guess the main thing, right? What we generally do internally is keeping a tight control overall in terms of any additional thing which we are doing, right? So first is it has to be ruthlessly prioritized overall, right? Every decision which we are taking, right? There are many options always, right? What needs to be done, right? So first is getting priorities right internally and then communicating that with your investors, right? I guess that is far more important, right? And of course, sorry to say this, but there is always a seasonal flavor in investors, right? This is for the entrepreneurs, right? So you would always feel that challenge, right? In when you are meeting your people, those who are with you, and people, those who are incoming, right? As he rightly pointed out, that the idea is to communicate, right, how you are thinking about building the company, right? And when are that, at what point in time, what efficiencies will trigger in, and this is how you look at things, right? And this is the data which we have shown through execution, right? I guess this is a constant communication channel which you have to build with your investors, right? And talk that efficiently, right? I guess that happened multiple times between us, right? So I guess that is very important, right? When you do and doing ruthless prioritization and making sure your internal team is aligned to that is a far more difficult job than you think, right? And you making sure that you are having right hires at every point in time in the company and they are able to align with the overall DNA what you have built in the company, right? So just doing that integration very quickly and making sure investors are also getting integrated with your thought process overall. So I guess that is key, and things have to work out also. So
I guess I have a very different story here.
I was waiting for that.
Okay. So for me, I think it's been a long journey as well. So my Jinesh invested in me in 2015. I was a stingy guy, not even willing to spend a rupee. I still remember even expenses worth 1,000 rupees, 1,500 rupees would not go out without my approval. I still remember that meeting where Jinesh was like, "Teko company chalana hai ki sirf बैठ के खर्चा कितना हो रहा है मुनीम बनना है." So that was a board conversation with Jinesh and I had. Jinesh is not here today, but yeah. So Subhadeep was also there as a part of that meeting. Then I think that was the only time we had conversation about expense, and Jinesh was about, you should not be this much of a control freak, which I now very well understand, because at this scale, had I been that person, we would have not been sustainable. Now, going forward, I think I never got the pressure from the investors, and I think I have a lot of them. I think I probably have 8 to 9 investors still on my board. And I never got pressure from them ki Devin, you need to grow this much at the compromise of this profitability or expense of this. Nor did I got a pressure in terms of that you need to focus really on profitability only, chuck growth. Okay. So for us, it was not really about growth or profitability. Either being the focus, it was more about trying to see the business model that we have, the products that we have, driving success for them, figuring out avenues to grow them faster. Okay, so I think that was the focus area. It wasn't that this much X growth should happen or this much profit should happen at any point of time. Even today, when I say that हम लोग profit करेंगे, the board is happy about it. Nobody is like, अरे इतना क्यों कर रहा है और profit करना है. We say we will do growth. The board is not, इतना growth क्यों कर रहे हो और करो. Okay, I think, but our commitment to profit really came during COVID. COVID time, we saw that, we have been trying to run the company normally, pursue our passion, drive our customers, value proposition, etc. But COVID time, when we were able to slash down our cost, like almost by 60%, 60 to 67%, we were able to slash down our costs. That moment I started realizing what have we been doing for so many years. Then when I look at our products, like one product we used to make for 28,000, sell it for 35,000. Today, we've been able to slash down its cost from 28,000 to 3,500 or 4,000. And we are like amazed. How much have we been paying all these years? Had we got the cost right in the beginning itself, we might have not needed venture funding, honestly. So I think all of these experiences has made us realize that when you are slashing down cost, it gives you so much more control. It makes you so much more efficient, brings so much more clarity. That is when we got committed to ensuring that whenever we are, say, in the mode of scale, we do have some quarters which is focused on cleanup. And I think the conversation with investors has never been about making this much profit or making this much growth. I think I'm probably very thankful to the kind of investors I have.
No, that's actually fascinating. And one point here would also be the amount of engagement you were able to bring, and you touched upon that point, Mukul, that how do you also take your team along in this, right? Because slashing that cost, or when you're looking at an uncertainty in business, if you don't have your team aligned, and I know that people took pay cuts, they got rewarded later on with equity. So there's a lot of creative ways in which founders can actually navigate these quote unquote choppy waters, if I may. So just again, in the interest of time, what I would rather do is, open it up for people if they have questions for you guys or anything of that nature. I see 1, 2, yes. If you can get some mics to them, please. Or you could just stand up and ask. I don't know if that's going to... Yeah. Just maybe your name, and then if you're addressing it to anyone.
Hi, my name is Jayant. I'm also kind of building a deep tech startup. And as you mentioned, about cost cutting. So it is like one of the important metrics for any startup. I would be very interested to know out of that 70%, what was the maximum amount of, kind of cutting that you did and how you managed it? Because it would certainly have implications across the board in terms of operational expenses and other stuff. So if you could please, elaborate on that, please.
So yeah, I think in terms of the cost reductions that we focused upon, I think COVID was like a crazy moment, right? This was the beginning wherein we didn't even know the world is going to survive or we all are going to die. So I think probably 60 to 67% is quite drastic. So to tell you that we did not fire like say 30% of the people. We don't even fire 5% of the people from the company. Okay. So we were very creative in conversations with employees at that point in time that, see, we don't see you really contributing here because the projects that you're working on are not really moving. Why don't you volunteer to take time off, spend time with family, and we will still pay you some salary. Okay, and you probably learn something or you do some freelancing somewhere else where you can go and create value. So why don't you do that? So we got certain people to sign off for that. Then, so that way, and we also created a phantom stock model that say if the company does well, we did not offer equity. We created phantom stocks. If the company does well and achieves certain targets, this all will come back to you. And to be honest, people made 4x of what they let go in very short period of while. Okay, so that is the way we structured on the salary front. Other than that, when we went down on the cost, we started crunching the numbers. We saw that everywhere there is scope. Everywhere, the moment you look at the cost of goods sold and the cost of the goods sold of that and of that, the moment you start going deeper and deeper and deeper, till the point in time everything becomes a human resource cost. Okay, we didn't even have to go that much deep. Probably 2 level deep or 3 level deep. The moment we went that deep on majority of the things, we saw we could drive that much reduction. A lot of things were not being even used that we had subscribed to, that we were thinking we are using. So just having that kind of a mindset, I'm talking about the indirect or the fixed cost, we were able to reduce. And by the way, our landlord did not agree to rent reduction. So this is keeping the rent constant.
Yeah, please.
Hi. I was just looking at your websites, etc. Really interesting and great models. Given that both for Tractor Junction and maybe even for Ecozen, the target market is at the end of the day, the farmers, right? So what are the kind of financing models or financing partnerships that the startup ecosystem is exploring to, say, one, obviously scale your target audience, and to unlock these solutions for the farmers? And if not enough, what is needed?
Right. So for tractors, thankfully, there are umpteen financing options available. For new tractors, there are more than 30 plus lenders in the country, private. I'm not talking about government banks. For used tractors, when we started the business, it was a little challenging because it was a largely unorganized industry. The lender will not pay you till he has his hypothecation on the asset. The hypothecation will only happen once the broker receives his payment, but the customer does not have the payment, right? So that is where the wheel is stuck. When we started the business, we assumed and we hoped we crossed our fingers that we will target a finance attach rate of 25%. Because in parallels with the passenger car segment, the attach rate is close to 50%. So we tried कि यार 50% करते हैं. Our finance rate, attach rate today is more than 80%, and we don't even try for it, right? Because we were able to solve it with the lenders. We were able to create a trust with them that we will take care of all the documentation, and hence a farmer can come pay in a lot of cases 0 down payment and walk out with a tractor which costs about 4.5 lakhs. So this is what we were able to solve by establishing trust with the lenders. Yeah, so that is from our side.
So I think the story is always greener on the other side. And this is a very green story for me, and also considering it as tractors. So when you talk about Ecozen, our products are categories which did not exist before. 2012, when we started off with solar pumping country में exist ही नहीं करता था. मतलब साल के 100 भी नहीं लगते थे. Okay. सोलर कोल्ड रूम की कूलिंग की भी बात करें तो आज ठीक है साल के 100 के ऊपर लग रहे हैं. Okay, we are probably doing 700 or so. But financing is a big problem in the country. And when we try to, we even went to a point when we told the bank, you take 100% FD, but please finance. Why are you not even doing that? So we wanted to kick off the model. And we saw even in that case, the penetration of the information from the head office to the branch is really bad. So that, how did we solve for it? We tried to understand what is happening. Why is this the situation? We learned that there is distribution companies who are providing very subsidized power to farmers. So instead of going to banks, we went to the distribution company, electricity distribution company. We told them, see, you are providing all infrastructure, you're providing the power for free virtually to the farming community. And it's impacting you, right? The transmission losses itself are 30%. So today I am paying 15 rupees per unit or 19 rupees per unit. The farmer is not even paying a rupee per unit. How do you manage that sustainably? And that's like a large power load for you. So we convinced them for them to get a financing from NABARD, okay, the distribution company, and we told them, this is your asset. If you make it more efficient, if you make it more sustainable or renewable, you will save money. So that is how we unlocked scale for our products. Okay, but today, if you ask me what am I thinking, I am thinking that beyond that as well, we should have financing as a solution. We did not have enough volume, enough track record to convince lenders earlier. Like tractor started working when they were able to establish a resale value for the tractor. So today, the categories we have created are coming to a point wherein the resale market could be looked at. There are some examples of resale values. Okay. So we are moving to a point wherein we are looking at working with existing NBFCs, trying to work with them as a banking correspondent, take some risk along with them, also considering to set up our own financing vehicle in the longer run. So yeah, that is probably the heart of the problem or the challenge which we are solving right now.
Hi, my name is Anup. My question is to Mukul. It's actually two questions. So first one is on the team side, where you mentioned how important it is to get the team aligned and work towards a singular mission. So can you give an idea about how you do it in the agri inputs business, which is a very typical traditional thing going on? And the second question is more on the idea of a particular startup. So I'm building something on the farmer facing front. And so far in the last 6 years, I've experienced that these middlemen, the channel partners which are there, they control a lot of the industry. So going to them and setting up a marketplace for them, doesn't it create a conflict on a farmer front, because they are the ones who are ultimately consuming the agri inputs? So those are the two things.
Sure. So answer for the first question can be little long. I'll try to cut it short, right? Typically the hiring process, right, which I see companies usually follow is focused a lot more on functional skill set of a person, right? We, on the other hand, focus more on the foundational skill set, right? So foundational skill set can be as simple as, can you build winning teams, right? Irrespective whether you are in a product team, engineering team, sales team, or whatever, right? So our hiring process, we first check for the foundational fit of a person, even before we look for the functional skill set, right? Doing that, I guess we have been able to get people, those who are really solid in foundational skill sets, right? And then the hunger to learn, right? I guess that is a simple way of communicating that. Hunger to learn, right? That can translate a marketing guy, if he's a smart chap with solid foundational skill set, you put him in the category team, he will perform equally well, right? So you, in nutshell, like you might need functional expertise in some of the areas, but the type of business we are building, you don't essentially need industry expertise to the team, right? So I guess that has been our recipe of building the teams internally, right? And that has delivered results in the immense fashion for us. Coming to the question number 2, right? Which you said, like, you know, there is the channel controls everything, right? You have to get to a deeper level to understand why it is so, right? The farmer, right, is trusting, the better way to look at it from a positive or optimistic point of view, that the farmer is relying on this guy from the last 20 years to make a purchase, right? There is a trust. They are not deciding, they are making them win. That's the reason this guy is there, right? The moment you have that lens, right? In the retail world, if a retailer is not serving or channel is not serving the needs of the end consumer, right? They will go away, maybe not today, 5 years down the line, right? So if this channel has been built out over the course of last 10 to 15 years, right? There is some value which is getting created at that note, right? So you see it from that standpoint. And when we partner with this, right? So the goal has to be very clear, right? What are we solving for these guys, right? Essentially in the chain, right? Everyone is there to make more money, right? And do a better business or grow more, right? So I guess that should be very clear from your value proposition standpoint. This is you are going after and this is what you are solving, right? Now imagine this a scenario where you can deliver a product which is 10% cheaper to this guy and 5% cheaper to a farmer. Isn't that a win-win? Right? So you have to think it from that lens, right? And I am generally of the view when there is somebody in the value chain, they are definitely adding value. Otherwise, in India, right, SMEs are so competitive, right, that they would eliminate you, right? So that they won't exist otherwise. So if there is something offline available, right, it means it is working fine. That is the reason it's there. So you have to change your lens, right? And the moment you do that, you'll start seeing those guys as partner, right? So yeah.
Great. Thank you, Animesh, Mukul, Devendra, for this. And thank you, everyone, for being a wonderful and patient audience. Any other questions, please grab hold of them while we're just in the paucity of time, sir. We would request any questions that you have, please address one-on-one. I've been firmly told by my team to get off the stage quickly. So I'll respect their decisions. I'll hand it over back to Shaina. But thank you very much for this
Thank you,
patient
Subhadeep.
hearing.
Yes. Okay. Yes, sir. Yes, sir. Thank you.
Thank you.